Hey everybody, Travis Watkins here. If you've been enjoying these Facebook Lives, you might enjoy reading my book, The Ultimate Survival Guide for IRS Problems, and you can get that at traviswatkinsbook.com, or if you need immediate assistance with a tax problem, please give me a call, 800-721-7054. All right, today we're talking about a question that I get quite frequently, and that is, if I can't make enough money to pay for necessities, if I can't pay my bills, if my expenses are more than my income, then will the IRS stop collections because of this hardship that I'm in? And the answer is yes, they will. There is a program there at the IRS that proves that they're not completely tone deaf to these problems that folks face with hardships in life, and they call it the IRS currently not collectible status, or they call it C&C. It means that you are essentially uncollectible at the IRS, and they will put you in a safe harbor or stop collections for usually 2 years, sometimes longer, up to the full amount of the statute of limitations, or CSED, as they call it there at the IRS, the collection statute expiration date. So that is it in a nutshell. Here's kind of a few things that are drilling down a little bit deeper on this. If again, if things are bleak and you cannot pay for necessities in life, food, clothing, shelter, health, welfare, transportation to work, those types of necessities of life, then you might consider giving the IRS a call and going for this uncollectible status. It is a status 53 at the IRS. That's how you can request things there. They do now at the IRS, when they put you into a status 53, in most circumstances they will now send you a letter saying that they have put you in to that uncollectible status with them. They used to not do this at all. They would just flag something as uncollectible, and you never really knew if you were in it or not. You would just enjoy the benefits of not being collected upon during that period of time. But that is now available with them, where they will send you some notification that you are at least in that program. They can review CSEDs, or excuse me, they can review C&C status every 2 years, and what sets that off and what kicks folks out of uncollectible is quite simply they're just making enough money to now pay for necessities of life and to pay for their tax liabilities. And how does the IRS know this? Well, it just shows up on your tax returns, or people are filing 1099s or W-2s on you, and it looks like you're back in business and able to be collected upon again. All right. Here's what the recipe is, quite simply, for uncollectible status. They will ask you for a Form 433A, and we've talked about that in previous videos about what that is. It's the collection information statement at the IRS. It shows what assets that you have. It shows what your income is, and it also shows your expenses, and these have to be legitimate expenses with backup if the IRS asks for backup on these things. It's the same forms that you'd fill out really for any type of tax relief with the IRS, and if it shows there that your net disposable income and assets are the expenses are higher than the income, then they will put you into this status 53. Also, as I mentioned, you've got to show that you either don't have assets or the assets are upside down or you can't access them for some reason quickly. Then they'll put you into status 53. The downside of status 53 uncollectible status is that the IRS will still file liens in this process. If you owe more than $10,000, they still have to collect and protect their interest in any property that you have, and that debt, or excuse me, that lien will stay on conceivably during the whole time that you're on uncollectible status. Same thing for the tax debt itself. It just hangs out. It doesn't go away, which is a downside. It just kind of hangs out there collecting penalties and interest while you are in this safe harbor. Other downside, it may trigger a trust fund recovery penalty assessment. And what that means is if you're a small business owner or a large business owner for that matter, and you have payroll debt, the IRS can come after the responsible persons for that tax debt. It's anywhere from 40 to 60% usually of the whole payroll tax that can be assessed against the owners, the responsible persons at the business. And same thing is really like liens. The IRS wants to go ahead and get its assessment out there against the individual owners of the business, even if those owners may not be solvent and collectible at that time. So IRS has to protect its interest there. They will still do trust fund assessments. The biggest one, though, is that the tax never truly goes away while you're in that status, unless the collection statute expiration date happens to run. And it does run the entire time that you're in status 53. And if the collection statute expiration date passes while you're in there, while you're in status 53, well, then so be it. The tax essentially just gets forgiven. But again, that CSED is 10 years, so the IRS has plenty of time to do collections there, and is usually quite content letting the penalties and interest just continue to run. Now, you'll also have to, in most circumstances, file any unfiled returns in there, especially the most recent one, because the IRS wants to check the income, the net disposable income, to see if you are indeed collectible or not. Here's how you do it. Here's how you ask for status 53. Quite simply, if you have a revenue officer assigned to your case, one of those real live collection officials from the IRS, they have the power to put you into status 53. And it's a pretty quick deal. It's just showing them that you can't make your bills, you can't really stay alive without this safe harbor, and so it's an immediate status that happens at the IRS, and your revenue officer can put you into that. If you don't have a revenue officer, thank your lucky stars for one thing, but if you need to make this request, just call the automated collection service at the IRS. That number is 800-829-1040, and be prepared to wait on hold depending on what time of day you call. But the officials there at the automated collection systems can make a status 53 assessment. They'll give you a fax number to send in some documentation, probably the form 433A, probably your last filed tax return also. And people ask me, well, why do they make me send in my tax return? They're the IRS, don't they already have it? Well, yes, they may, but they want you to send this in to the collection wing, not the filing compliance wing of the IRS, to check this thing. All right, so very important deal with the IRS, especially if you cannot make your payments to stay alive, to pay for necessities, food, clothing, health, shelter, welfare, transportation, to work. All right. If you need help with this process, we're available 800-721-7054, or if you'd like some more information on these things and other IRS debt collection relief programs, check out my book, TravisWatkinsBook.com, and get you a free download that's available immediately. All right. Thanks for watching, and have a great day.